Hey guys, in today's video we're going to do a trade recap like we do every week, and we're going to use Home Depot as our stock, and we're going to go over a trade example. If you're new here, welcome. My name is Bruce. If you are trying to build an IRA or grow some wealth and you like using conservative income option strategies, you're in the right place. So let's jump in and I'll show you what we're talking about here. So again, we're going to talk about Home Depot. This is an actual trade that we did 2 weeks ago, and I'll walk you through the process. Very straightforward trade. So the wheel strategy, if you're not familiar with that, you should probably get to know that trade. It's a really good trade, again, for conservative option income type accounts, IRAs, things like that. It's a covered call and it has some other little simple things around it. But basically, I'm looking at Home Depot, and I like to use stocks. If you want to use a strategy like this, and even cover calls, any kind of stock, you really need to have a stock that you're comfortable owning, right? So over here, I'm watching Home Depot. It's been on the radar. I know they've got a dividend coming up here. Part of the strategy is to catch that dividend, and it's a meaningful dividend. It's $2.33, which is a meaningful amount. So Home Depot's coming down. You see we hit the 50-day right there. This is simple, super simple moving averages. That's the 200, that's the 50, that's the 20, and we had come down here and we hit the 50. Now I don't like it to be under the 200. You know, obviously that's never ideal, but I like Home Depot. I've been trading professionally for over 35 years, and I've traded it many times, right? And so I'm comfortable with the name. You have to be comfortable with the name if you get put to. So what we're going to do right here, what we did, is to sell some naked puts right there. And let me show you. I'm going to zoom in a little bit here, and I'll walk you through the exact trade. Now, if you're not familiar with this platform, this is Charles Schwab's called Thinkorswim. We're going to go to the Analyze tab, and I'll walk you through step by step. And what we'll do, we're going to go down. These are in order of the way that I mentally process a trade. So the first step is to sell a naked put. Right now, notice this is not traded because this was on 6th of March. Now I'm recording this on the 16th of March, but let me show you again. I want you to understand the thought process. So on March the 6th, we actually sold this on March the 2nd, on Monday, for a Friday expiration. And why in the world would we do that? Well, they paid us $4.50 to do that, right? And I wanted to get put to there on Friday because guess what? That $2.33 dividend, it goes ex-dividend on the 12th. So you have to own the stock before that or you don't get the dividend, right? So we have the option set so that you get put to on the 6th, meaning you have to buy the shares, but they're going to pay you $4.50 to buy the shares, right? For the obligation to buy the shares. It's just simply a naked put or a cash covered put, depending on the terminology. And so that's what we did. We sold this for $4.50. Now, remember and I'll show you this is a little toss trick, tip and trick if you want to use this. So once an option expires on toss, it's not traded anymore. But as long as you don't close this, you can take this to the next available open expiration, which is 20 March, because this is 16 March. We're not to 20 yet, so that's still a live option. You click on that, and it will populate with the price. Now, this is not, for that date, is not the right price, but if you just can't remember what price there, is $4.50, right? So, again, I just want to show you that little tip, and it'll come in, it'll mean more in a minute when I show you what we're going to do. So we sold this, we put $4.50 in our pocket up front, right? So the naked put means we are willing to get put to, we own the stock at $3.70 minus the $4.50 that we get paid for the put. So we own it at $3.65. So this is step one. Then we own it at $3.65. If we get put to, we own it at $3.65.50. So that's step two. Then we come over here to our trusty trade tab, and as you can see, it went ex-dividend on 3/12, and the dividend amount is $2.33, right? We already knew that, but this is where you find it. Home Depot, you do a little drop down thing right here, and it will show you the X date. You have to own it on the X date or you don't get the dividend. And then you get the following dividend if you held it for 3 more months. All right. So if you take 365, and I've already done the math here, so if you take 365.50 minus the dividend of $2.33, you get 363.17. So that would be your new cost basis, including the dividend that you get. So you get so we got 450 from the put, we get 233 from the dividend, and now your cost basis would be 363.17. I'm going to clear this up for you. So we went from that to that to that to that. I'm just going, descending order down here, right? So that's your new cost basis, right? Then the way the wheel strategy works, once you get put to, we go out here, and I like to give it a little time. Let's just say 60 days out here. We got put to here. We could go to April, it doesn't matter, but I want to go to May, because if we zoom out here, there's nothing really going on with Home Depot until the next earnings out here in May, on May 20th, right? So if we sell a covered call on May 15th, then we can decide if we want to let the stock go and be called away or not. It's better to be able to make a decision ahead of earnings when you have the choice, and that's an easy choice right there at 15 May. So if we look over here, super simple, that's our expected move, is plus or minus. You see that plus or minus 34 points on top of kind of where we are now, gets you to about 375 or 380 kind of area. So I say, okay, let's come up here to 380, and we're going to sell a covered call, and we can get $3.50. That's the mid, right? So that is that. We are agreeing to get called out at 380. They're going to pay us $3.50 for that, right? So if we take our adjusted cost basis and subtract this, which they're paying us $3.50, now our cost basis is $3.59, or excuse me, $3.59.67 would be our cost basis. So we got paid on the put, right? We got paid on the dividend, and then we get paid on the call. And guess what? That's not all. If we got put to, and our cost basis is $3.59, and we're selling at $3.80, that is what is that, 20, I think I did the math here, let me double check because I don't want to tell you wrong. 359 from 380, I can't do that in my head. So we make $20.33 on the whole transaction. If we got called out in May at 350, we would make $20.33 on our original cost basis, which gives us a return of about 5.65%, kind of roughly 5.65%. Now that's in 60 days. Remember, we went to May, so the time you go in to the time you come out, it's about 60 days, maybe a little bit more, 63 or 5 or something like that. But that's about 2.8%, 2.9% a month, right? Now we're holding it for, again, 2 months roughly. But if you annualize that, that's running about 34% a year. And you could turn around and do it again and do it again and do it again. Again, I've done this so many times for so long on stocks, and just lather, rinse, repeat. It's a good strategy. There's a little, there's kind of tweaking along the way. Do you want to choose that, or maybe something lower, something higher, how much premium you're going to get, etc., right? So that was the plan. So I'm going to show you they don't always work exactly like you think, because here was our trade, and this was actually a live trade I did in our trading room, right? So 3.2 was right there, and I was thinking this was, look, it came down, touched the 50 there, the 50 there, we're on the 50, and I said, well, this thing's going to bounce. Here's our thing. So if it bounces, you make 450, and if it goes higher, you're not obligated to buy the stock, and you just make 450 in a week, and you $4.50, and you just walk away. Pretty nice, right? But what happened, if you look down here on the bottom, this, you see this 3.2, that's the day we sold them. There's 3.3, see on the bottom down here, 3.4, 3.5, this is 3.6, and we're down here, right? So 3.6 was when this thing expired. The day it expired. Here's what I want you to take away from this. I'm looking at this and I'm going, I don't like the way this is trading. It's broken the 50. I just didn't have much support down here below it. The trend is bad. The whole S&P is, trending lower. I said, this is really kind of making me nervous. I'm not nervous with Home Depot, but I'm nervous with the overall market. I don't like this trend. I did not think it would break, and it did. So I said, you know what, guys, this is on the 6th, on the day it expired. I said, you know what, we have a choice. We got $4.50 in this thing. Let's just buy it back and get out from under the obligation of doing it. So we did. So we analyzed, or I'm going to flip this trade around to close it. Guess what we had to pay? $11.50 to buy it back. And you might be thinking, oh man, that's horrible, right? Well, not really. So we took a $700 loss on it, But if we would not have, we're down $2,200, kind of, sort of, roughly. Well, actually, we would own the stock here. Yeah, we'd be down $2,292 if we had not pulled the plug on it, because the stock has continued to trend, lower, 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 lower. Now, again, I still like Home Depot in the grand scheme of things. Probably wouldn't make that much difference. I just don't like taking heat like that when we can close this thing. You had some red flags there going. Home Depot charts breaking down. The overall market is getting weaker and weaker. We can undo this transaction. Everybody always thinks that once you sell a naked put, that's it, it's over. No, you can undo it. You can buy it back anytime you want to. And we did this like literally an hour before the market closed on Friday, or we would have had to buy it. And again, it was $700. And that's, kind of in the grand scheme of things, that's a paper cut, because this was a $35,000 transaction. So I wanted to show you how that worked. Good, bad, ugly. Great strategy. I've been using it for 30 years, probably at least. Be comfortable with the stock you're owning, but also you have a lot of flexibility, right? What you can do, you want to catch the dividends, be aware of those X dates, be very aware of earnings dates and things like that, so you can kind of plan your trade around that. And if you want more detail on this, we do these all the time in my trading room, and I'll put a link down here for our trading room. And we do these all the time. If you have questions, certainly let me know. And join us in the trading room. Love to have you in there, and we do this side by side. We're trading real money in there as well, and so hope you can make it. Be sure and sign up for the free newsletter if you guys are on YouTube. Otherwise, this is going to the newsletter video of the week. I do a trade recap once a week, and then I do a list of kind of hidden gems every Thursday as well. So anyway, thanks for the time, guys. I appreciate it, and let me know if you have any questions, or if there's anything you want me to cover specifically, leave it in the comments and I'll try to do a video on it. Thanks for your time, guys. I appreciate it. Take care.